Yes, guys, so now you understand the significance of single candlesticks and what they represent when they print on the charts. It's time to put two together. The rule of thumb within the markets is the more information, the more data you have, the better you can back your argument. So by understanding what candlesticks mean whenever they're next to each other and what they represent in terms of the relationship between the buyers and sellers, it can help back your argument even more. There's two key formations that we're going to take a look at. We have the bullish and bearish engulfing candlestick, and then we also have the tweezer top and the tweezer bottom. I'm not going to spoil it. We're going to go into the episode. I'm going to show you on the charts. All right, guys. So now you understand the significance of a single candlestick formations and what they mean. We're going to pair together two candlesticks and see what they mean side by side when they print in a particular fashion, basically. All right, guys, just remember, you'll get this as we go further and further on into this series, is that the more data you receive from the charts in the form of candlesticks, the better idea you have of the direction of the market, okay? So you understand the significance of single candlestick formations. When you have two candlesticks put together, it can give you a better understanding of the directional bias of the market. All right, so we're gonna take a little look at them now. Okay, so we have a bullish engulfing candlestick formation, and we're gonna take a look at bearish engulfing as well, but we'll start with bullish first. So we're still on the weekly time frame, yeah? Remember, each candlestick represents 1 week. Okay, in this story of these two candlesticks here, okay? Yeah, that is a really bad circle, I apologize. The week of the first candlestick on the 30th of October 2017, we opened around $7,350 and we closed around $5,860. The next week obviously opened on that price point. But what it did, instead of continuing lower, it reversed and closed above the previous week's entire price action of around $8,050. So, without overcomplicating things, what this basically is telling you is, by the print of these 2 weeks, which side of the market won? Okay, which side of the market won? It was clearly the bulls. The bulls completely engulfed and overpowered the bears for that 2 weeks of price action. And it's the Francis Ngannou and Conor McGregor analogy, okay? If you were to bet, if you seen Francis Ngannou and Conor McGregor stood side by side, ready to fight, who would you bet would probably win? It would most likely be Francis Ngannou. More times than not, Ngannou will most likely beat McGregor purely because of the size of him. Yeah, that's why we have weight classes in combat sports, okay? It's not always going to happen. Maybe McGregor might kick him in the head and get a lucky kind of break. But 9 times out of 10, 8 times out of 10, you're going to hedge your bet that Ngannou's going to win. Same principle. If you see two candlesticks form and one candlestick has completely engulfed the other one in whatever direction, in this case bullish, you would like to think that the market will continue in that given direction, okay? The bulls won that little 2-week battle there. All right, exactly the same on the bearish side, okay? Exactly the same on the bearish side. The week opened at around $7,400, closed around $8,200, but the next week closed significantly lower and completely engulfed the previous week, okay? And it's the same concept, okay? That the bears clearly won that 2-week battle of price action, all right? The bulls were in control, but then the bears completely took over and price continued lower. Same principle as the Francis Ngannou McGregor on the flip side, okay? You have them side by side. Which one's bigger? Which one's more powerful? Which one would you hedge a bet would win? Next, we have double tops and double bottom formations. We're going to start with double bottom formations, okay? Which you can see nicely here, okay? What we're essentially looking for with a double bottom or a double top formation, we're starting with the double bottoms, is the market rejecting a specific price point twice, all right? And remember that analogy with the animal running out of its habitat, okay? Imagine the animal runs out of its habitat, sees a predator, runs home, all right? But then after a week or so, it gets brave again. It tries it again, but then it sees the predator again, and then it runs home. It's a double confirmation that the market doesn't like that price point, okay? In this scenario, it's a double confirmation that the buyers have stepped in around this price point and the market continues in the opposite direction, okay? Same principle. It always has to be within reasonably, same principle, okay? You're looking for quite an accurate test of a similar price point. That's why you get the double bottom formation. It can be called tweezer bottoms or tweezer tops as well. They have a variety of different names, but for this example, we'll call them double tops, double bottoms, or tweezer tops and tweezer bottoms. All right, on the flip side, yeah, double top, one test of a price point, the secondary test of a price point. Look how accurate this one is, by the way. If we pull the crosshair, you can see how accurate it is. It's $59,576. And you can see how accurately the second week came up and tested it again. Remember, that animal runs out, sees a predator, doesn't like it. The second week, he gets brave again. It forgets, comes out, sees it again. Nah, I'm going home. Same principle. The market will reverse. Not all the time, and you'll get to understand that. But when you see these sort of formations, all right, when you see these significant patterns form with other technical factors, all right, that we'll get into, it can start to become really, really powerful stuff, and you can start to frame your arguments. That's all for the significant double candlestick formations, okay? They're the ones we're going to focus on going forward. And I will see you in the next episode for 3-bar formations. Thanks for watching, guys. Go off into the charts, have a little play around, practice on lower time frames, practice on higher time frames, have a look, see how the market prints, and you can see how powerful these can be. Thanks, guys. Yes, guys, so I hope you enjoyed that. The double bar formations are really, really key. We use it when we're looking for entries, exits, and so on and so forth. You need to take your time with it and get used to what you're seeing on the charts. So go back, take a look, and start to use this in your analysis today.